speak to you a little about the revenue also. FY23 we saw a 6x jump. FY24 it almost doubled revenue from operations. What I want to understand from you, and I'm sure investors would want to look at that, by how soon do you expect some sort of stability in the revenue, that it's consistent at a particular level? What would be that consistent growth that you see in your revenues? And of course, by when do you expect to achieve that consistency or predictability in the revenue growth?
Yes, we've seen very strong revenue growth. Like you said, FY23 over 22 was almost 6x, so slightly higher probably. And FY24, which we saw in the RHP, was almost double. 5,300 crore almost from 2,700 crores.
Yes.
So we've seen very strong revenue growth, and I actually believe as a business and as an opportunity, we're just scratching the surface. EV is a mega trend, one of the most important mega trends in automotive after 100 years. 100 years ago, automotive moved from coal engines to internal combustion engines, and it's that level of a shift. And we are just scratching the surface within scooters, and so far we have a portfolio of scooters. In our book, we've talked about how our bikes are going to come along over the next year. So the potential for electrification of India's automotive segment is very large. And as we go along, we've also focused on building a foundation for electrification. Our strategy has been focused on vertical integration, building core manufacturing capabilities in-house, and especially the core R&D capabilities like our cell, which is going to be a foundation for accelerating EV penetration by reducing cost and by making core technology in India. And as we keep executing on this foundational element of our business model, the EV penetration will continue to rise category after category. So far it's scooters, then it'll be motorbikes, etc., etc. So I do foresee, this whole opportunity for us and the whole industry, frankly, to grow into. Our revenues, I can't put a number to it today, as you understand, but we do expect revenue growth, and even after FY24, over the last 3 months, the monthly numbers are all in public domain in this industry on the Vahan portal. So you can see how our volumes have continued to grow over last year.
Correct. So you expect the aggressive revenue growth at least to continue for some time, considering how many new things that you're doing and new projects which are being taken.
Like I said, the penetration is EV penetration in India is still in its infancy. And this is a decadal journey in a sense, that we are on.
Makes sense. Harish, with revenue, of course, the losses have also gone up. The losses widened from about 784 crore rupees in FY22 to about 1600 crore rupees in FY24. EBITDA has also, the operational performance has also moved in that direction. Now that you're entering the public market where profitability does make a lot of difference vis-a-vis the private market, what I want to understand from you, what is the target that you're moving ahead with in terms of that glide path towards profitability? Is there a number in terms of, the time target that you see yourself turning profitable by?
I think you've seen our numbers, FY23 to 24. The EBITDA has significantly improved, and we'll shortly post-listing announce our Q1 numbers. You'll continue to see the numbers there. So I can't really comment on the future numbers. But our business design and the underlying financial design has been very rock solid in terms of moving towards profitability. Because as we discussed initially, that it's a business, right? It has to generate returns for our stakeholders, for our investors, for our shareholders. And hence in our journey, that path is well set. As we scale, as we grow, we are on that path in a very solid way.
What's the destination? Which year?
Can't really comment on the future, projections.
Bhavish, you want to add because
this man won't let me add. But I think like Harish, I'll underline a point that FY24 over FY23, our revenues have gone up, and our EBITDA percentage has improved significantly, and all of this is in the RHP book.
Correct.
Now, manufacturing as a business, as you scale revenue, you get very strong operating leverage because your fixed costs and all don't scale with revenue scale. And our volumes are continuing to scale. Last 3 months also in the Vahan portal, you can see how our volumes are scaling. So there is a point in the near future, I guess, where people can extrapolate themselves on when it gets to a break-even point. And like Harish said, our Q1 results will be out right after our listing. So that will also show investors more.
If I could just understand one number, 1600 crore was the loss figure for FY24, first 4 months of FY25. What is the kind of losses which have accumulated in the first 4 months? And just on the unit economics basis, per scooter loss, if you had to put, what would that number be right now?
See, again, both these numbers I can't give to you on the show. They're in a book, and when we give our Q1 results, you'll be able to see. But again, thematically, as I said, manufacturing is a scale business, and as the scale of our production is increasing, the cost doesn't increase with it. And so, Q1 over Q4, Q1 FY25 over Q4, scale has continued to increase.
Okay.
So, in that sense, you can estimate where our margins are going. Another important point is, as we go on this scale and hence improving profitability journey, which we have demonstrated over the last 2 years in our FY24 and FY23, there are a few other key initiatives which are further going to improve cost and margin through this year and next year. So one of the core initiatives in that is our own cell, our own lithium-ion cell, the 4680 cell, which is going to come into production early next year. And as you know, in the EV, the biggest part of the cost is the cell. So as our cell comes in-house, as we start making that in-house, we further save a lot of money and further improve our margins. So all of these are roadmaps into profitability and then improving margins beyond profitability also.
Hey, thank you for watching this on CNBC TV18. Hope you liked it. For more such interesting news and updates, follow CNBC TV18 on all the social media platforms.